It's Wednesday, it's a weekly webinar, 24th of April, 2024 Q2. Let's start. So literally, their market cap at 10 million, right? The broker have an upside target of 212, and they're all focused on the reward. If you look at the fundamentals, I do believe it's improving. They've been going along, they're a software as a service business, which is 90% recurring revenue, right? And about 5.8 million of that is recurring. And literally, they made an EBITDA sort of profit. So they're not even burning that much cash. And they have literally 3.2 million in cash. So their enterprise value is 7.2. Now, 5.8 of that is recurring revenue. And I don't know if you click on there, you've taken the website. They have this app, which is a M Pro 5, and supermarkets use it, and train companies use it. It's basically for staff that are working around and doing jobs. So digitizing, staff innovation business. I can hear someone's mic on. Does that someone want to speak? Oh, anyway. So there's growth there. Like, I mean, there's even with the customer churn, but 15%, there's growth here very nicely. And the value isn't compelling as yet, but that's a lot of that is because they've only just got to EBITDA profitability. Health is very good. Now look at the margins here on software service, 86% gross margin, right? I mean, this will feed down. This is early stage. Hopefully, hope is not an investment strategy. They are literally they're kicking above the 50-day, but they're bottoming out, hopefully. What I quite like is, I do like this. I mean, they are also going top line. Like I say, they only burned, operationally, 1 million of cash. But they only use 3.64. Now, if they do that, of course, they can do that for 10 years. I'm hoping they'll get somewhere in 10 years. But the broker targets here, there's growth going forward of 12. Software as a service, the contracts aren't very big, but very few cancel. So all you got to do is chuck in the models. Are you winging contracts? That's the main thing. And so they do have decent growth here, 20%, 26, and they do have them being sort of profitable, in next year. So I think it seems like a good risk reward here. They're literally, pretty much a third in cash, and then they're going to be profitable. So going forward, 1.3 down sales, 10 EBITDA, 15 press, and I've got even on that 146%. That's of course but like I say, why these kind of companies are highly valued as software as a service, because a lot of that revenue is predictable. It's not like they have to win new contracts every year. If they do win a new contract, it just adds it onto the hopper. So of course, it's a small cap. What's the risk? It's quite illiquid. Look at that. Average daily volume, 5 grand. So I'm not going to go much bigger than that unless it starts taking off and the volume really picks up. There's not a lot of volume in there at all. So, of course, I did more than that today, I think, on the volume just in my buy. So it's ridiculous. I didn't know I did do more than that. So, yeah. So it's maybe worth a look. Manolete. I did a blog on this, of course. I bought some of these, and if you look at this, and the thing was with this, they had a perfect storm, because what's happened is, I don't know if you're aware of this probably, but during COVID, the government put in lots of support for businesses. Lots of businesses would have gone through, and in fact, that support even propped up a lot of zombie businesses that shouldn't have existed anyway. Especially now we're going to a hard time. And where is it? When we get to the blog up here, blog. So, and the figures are quite compelling. Where was it? There we are. So they say the withdrawal of large-scale financial support provided by the government to the UK business during the COVID-19 period has resulted in the highest level of UK insolvencies for 2 years. In fact, highest level, credit to liquidations, highest levels is 1960s. And if you look at their caseloads, and now back up to where they were, and government support has gone now for COVID. Of course, C-bills is coming back in. People can't pay them. There's people who are really in trouble. So there's lots of litigation going on. It's busier now than ever because of that backlog, that the suppression of the cases coming forward. And so if you look at the half year, there were signs in the half year. They had a tough couple of years, but that revenue's doubled pretty much in the half year. from a loss to gross profit of 5 million. And again, from a 5 million EBITDA loss to 1.7 million profit. So I quite like, I said, it's been a tough couple of years for Steve. And he said, yeah, it's been absolutely horrendous because the government's been propping up businesses and we've had so many cases we couldn't deal with. Now it's going crazy. And in fact, they're actually chasing C-bills down through Barclays and all that. And he said, if I could wish for the perfect environment, this is now it. So you've got a backlog in COVID cases pretty much. And you've got this, cost of living rises and high interest rates, high inflation, where businesses are going through at a huge rate. In fact, it's record levels of companies going into liquidation, and that's their business pretty much. So I think this could do very well. So again, so going forward, the margins are great. Look at the margins here. Right back here when it was like just after they put this is before the government supported everyone, but the operating margins are 25%. And even their post-tax margins like 18%. So I see decent upside here, 60%. What's the broker's got? The broker's got a lot more than this, I think. Yeah. Oh, they're 46% for next year, that is. That's a 12-month target. So maybe have a look at that. I mean, the chart isn't yet convincing. It popped up on that trading update. It's come back a bit. Like I said, I've only gone 2% on that. It's not above the 200-day moving average. It is above the 50-day moving average. I think, yeah, but it's not convincing. You may have to go sideways. But I think I do just read through some of the RNS, the trading update they recently released, or just read that blog, and you can see there's a change in wind here. They're now going to be back to a profitable company after 2 years of hard work. It's a high risk company, of course, but I think it's worth a look. Okay, do your own research. Like I say, it's always easy to get overly enthusiastic about companies that you own stock in. But Manolete there, I mean, you have to be living on the moon if you don't realize it's very tough for businesses out there. And those stats say it all. There's record liquidations. And when you see historic numbers like that, and I do put the figures in there, I guess they haven't got a broken it out, but there is going to be a broken apparently. I think they just signed with Canaccord. Decent investigate. A decent sort of broker. So I think Canaccord are going to put a broker note on them soon. Nominated advisor. So I think Canaccord Genuity. Yeah. So there you go. That's a good little broker, that. And what I like about this is Steve does, some of the it's not a guaranteed win, of course, but in that book, 100 baggers, how to find them, companies in 100 times. They do talk about there's very few traits that companies share in that. Two of them are they started off small. In fact, they started off as microcaps. American microcaps are bigger than our microcaps. They're $300 million there. And secondly, a lot of them had either a founder owner or a big single shareholder. And if you look at MANO, I think Steve has a decent chunk in the game there. So it's his company, and he's listed it. In fact, let's have a quick check. Make sure I'm not talking about through my backside here. Investor information, significant shareholders. Yeah, Steve Crooklyn, yeah. So he owns 15% of the company. She's got skin in the game there. Oh, that's what I thought was funny. Steve, I'm sure he wouldn't be offended if I say this, but he's no spring chicken. Down here, in addition to the 380,000 shares held by Mr. Crooklyn's mother, Barbara. Hey, Peter, Barbara. Barbara. Oh, Barbara, how's the shares doing, Steve? Oh, not too well at the moment, Barbara. Come on, Steve. Get it going. So, imagine that, your mother giving you a hustle over shares. Steve, shares are dreadful. That's what I used to get. My wife used to hold shares. And she'd look at the stock market. I said, it's a bear market, for heaven's sake. They're awful. Okay.